Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my European opening market comment for Tuesday, September 27th. Well, the tone of the day will no doubt be determined by the outcome of the US presidential debate last night. Now, the market clearly thinks that Hillary Clinton won. As you can see from this graph, both the stock market futures, the orange line, and the Mexican peso, the white line, took off shortly after the debate started at 0100 GMT. Now, the Mexican peso is seen as a bellwether for Trump's chances of winning the presidency, because he's threatened not only to build a wall between the U.S. and Mexico, but also to rip up the North American Free Trade Agreement, NAFTA, which has done a lot to promote manufacturing in Mexico. The debate may have convinced some people who were undecided, but it looks like it didn't manage to change many people's views, as far as I could tell. For example, the readers of the right-wing Drudge Report website overwhelmingly thought that Trump won. Similarly, the readers of Fortune magazine, a business publication with a generally Republican readership, gave Trump a small win, even though the magazine's own writers gave the debate to Clinton. Fortune itself said, quote, "The Democratic nominee presented as composed and commanding, ticking through her policy prescriptions while landing a series of devastating blows on Donald Trump's record and readiness." A fidgety Trump, meanwhile, tried repeatedly to ruffle her with interruptions while riffing his way through his own answers, but struggled on both counts. But a more scientific poll by CNN showed 62% of viewers thought Clinton had won, while only 27% thought Trump did. Now, this doesn't mean that Clinton now has the election sewed up. A few years ago, polls showed Mitt Romney won his first debate against Barack Obama by about the same margin, and we all know how that election turned out. What these polls show to me is the power of confirmation bias. That's the scientific way of saying that people hear what they want to hear. People who support Trump naturally found his arguments and style more convincing, while people who support Clinton naturally preferred her performance. The question is what the undecided people thought, and for that, we'll have to wait some time. With the race so close, the undecided people could tip it either way. But what the market thought was clear. The market thought Clinton won, and that's considered to be good for stocks, good for the dollar, good for risk-sensitive currencies such as the Australian dollar and Swedish krona. The reason is that investors like stability, and they dislike uncertainty. Now, whether you agree with her ideas or not, Clinton represents continuity. Although many of her views and policy goals are different than those of President Obama, both she and he are selling her candidacy as a way to build on the successes of the Obama presidency. In that respect, she represents continuity. And investors no doubt also remember how well the dollar did when her husband was in office. Once Treasury Secretary Lloyd Bentsen was replaced by Robert Rubin, the administration's mantra became, "A strong dollar is in the best interests of the U.S., and the dollar enjoyed a multi-year rally. Trump, on the other hand, represents change, at least insofar as he would be a change from the incumbent. He's also known to have almost violently different views on trade than anyone who's occupied that office for the last several decades. There's been a free trade consensus among policymakers of both parties for quite some time, but he's pledged to rip up almost all the country's trade agreements if he gets into office. President Bush imposed tariffs on Chinese steel back in 2002. Then the move was enormously detrimental to the dollar. Imagine what would happen to the poor dollar if Trump made good on his promises to rip up NAFTA and pull the U.S. out of the World Trade Organization. I don't want to think about it. For today's indicators, the Eurozone money supply figures aren't much of a market mover anymore. Economists in the ECB, one assumes, pay attention to the bank lending figures. They come out at the same time, but they don't seem to be market affecting. For an update on the U.S. indicators coming out today, please watch my North American opening market comment. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.